The number one mistake new real estate investors make: don't be one. 90% of new real estate investors fail because of this. They make one critical mistake that tanks their investments before they even start. Don't be one of them. Pay close attention, because what I'm about to share could save you years of frustration and potentially hundreds of thousands of dollars. So, you're excited about real estate investing, right? You've seen the success stories, the passive income, the wealth building, and you're ready to jump in. That's fantastic. But here's the harsh truth. Most new investors, with all their enthusiasm, fall into a trap that almost guarantees failure. And it's not what you think. It's not about lacking capital, or not knowing how to analyze a deal. While those are important, the number one mistake is far more fundamental. Buying in the wrong market. They buy in the wrong market. That's it. It sounds simple, but it's profoundly impactful. What do I mean by wrong market? I mean falling for the hype, getting caught up in the hotspot frenzy. We all see those headlines: this city's real estate is booming, or prices soar in Abeju-Lekki, Lagos, and naturally, our first instinct is to rush in. But here's the reality of a hotspot market from an investor's perspective. First, high competition. Everyone knows about it. That means bidding wars, inflated prices, and often, waiving contingencies just to get your offer accepted. You end up overpaying for a property, which immediately eats into your potential returns. Second, low cash flow. When prices are sky high, your rental income often doesn't keep pace with your mortgage, taxes, and other expenses. You might break even, or worse, operate at a loss, hoping for appreciation. But hoping isn't a strategy, especially for new investors looking to build a sustainable portfolio. So, what's the alternative? The smart money, the successful investors, they're looking for hidden gem cities. These are markets that might not be on everyone's radar yet, but they possess the underlying fundamentals for strong, consistent returns. Think about it: cheaper entry points. You can acquire properties at a more reasonable price, which immediately improves your cash flow potential. Your mortgage payments are lower relative to the rent you can command. Higher ROI potential. Because you're buying at a discount and potentially seeing steady rent growth, your return on investment, both in terms of cash flow and eventual appreciation, is significantly higher. Less competition. You're not fighting tooth and nail with dozens of other investors for every single deal. This allows for more thorough due diligence and better negotiation power. Sustainable growth. These aren't speculative bubbles. Hidden gems often have strong economic indicators: job growth, population influx, diversified industries, and a good quality of life that attracts long-term residents. Now, you're probably asking, okay, so what are these hidden gem cities? That's the secret sauce, and I'm going to reveal my top 3 cities for real estate investment right now that perfectly embody these principles in my next video. These are places I've extensively researched, where the numbers make sense, and where I see incredible opportunity for both cash flow and long-term appreciation. You absolutely do not want to miss that. So, make sure you follow my page right now so you get notified as soon as it drops. And before you go, I want to hear from you. Comment your city below. I'll take a look and tell you if I think it's a good market for real estate investors, or if you should be looking elsewhere. Let's get this conversation started. See you in the next video. Remember, the right market is the foundation of your real estate success. Don't make the number one mistake. Invest smart.